Hey, what's going on? Welcome back to the channel. In this video, we're going to be taking a look at Avax. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. Now, if you haven't seen the previous update, make sure to watch that before watching this one. And it's going to be linked in the top right-hand corner of the screen. Let's jump straight into the charts. So taking a look at the daily chart on TradingView, as always, we have the same Fibonacci retracement that I've had for a year and a half here, with the low printed in June/July 2021 and with the high printed in February of 2021. And right now we are in between the 0.236 and the zero level, which is obviously the swing low, which I think is going to be retested before the bear market is over. Hopefully we're not going to lose that low, because that would be quite negative, but hopefully we're going to see a nice healthy retest and a move to the upside from there, as we did see this very strong bullish breakout from January into February, which honestly was very unhealthy, and obviously we saw a major pullback into July from there. And yeah, that's the basic breakdown of the Fibonacci retracement. But if we zoom into the chart right now and take a look at the candles, we can see that we're losing a pretty important support level here that we created in November. We had that nice bounce from November into December, and now we're coming back down and we're losing this swing low. So this is invalidating the potential double bottom pattern that we could have had, which is quite negative. We've opened multiple candles below this yellow support trend line, so that officially deems this level as a resistance level from now on. The gap in between the 20 EMA and the 55 EMA is quite large, so that usually means we're going to see a potential relief rally. For example, just like we had the gap here, we saw a nice bounce to the upside so that the EMAs can come closer, just a bit closer, and then we had another pullback in December. And this doesn't mean that we have to have a relief rally instantly after this video, but it is a possibility. So if you're looking for swing trades, you could target the 55 EMA, you could target the 0.236 Fibonacci level, which is at $14.50, or you could target the resistance block that we have and that we lost here in November, which was previously our support block. But obviously you lose support, it turns to resistance, and you tend to back test that as resistance before you continue back down. So that is a potential play we have at our hands. And taking a look at some other Fibonacci retracements on our way to breaking this August high, because I think that's going to be a major indicator telling us that the bear market bottom has officially been printed. So once we do that, potentially in spring next year, so March, April, May, maybe even June, once we break this high, I think that's going to be a very, very bullish signal. And I think at that point, it's going to be pretty certain. We're going to be pretty certain that we have bottomed out for the bear market. Until that happens, you have good dollar cost averaging opportunities here. If we're also taking a look at a falling wedge on the weekly chart on the Binance website in just a second, but for the daily chart, as you can see, not a lot of volatility for the past 11, 12 days or so. So for now, it's good to dollar cost average at these all-time low prices. Well, not all-time low, but we're pretty low. Basically, we're near our June, July low. So I think these are good prices to buy into. And keep in mind, if you buy in at $11, $12, or $10, or even $9.50, when you're going to be selling at, let's say, $300, it really won't make that much of a difference, simply because there's just, it's not worth it really. If you're waiting and you're not buying into projects that you really like just because of that, just because of that 10% difference in price, well, you're just putting yourself at risk. Obviously, you can do whatever you want with your money, but I'm just saying that it's better to be exposed to the markets at least a little bit, and potentially seeing another pullback and just dollar cost averaging, rather than simply waiting for this bottom and catching the bottom and buying at the very bottom, which is very unlikely that you're going to be able to spot the absolute bottom. But if that happens, and you do manage to do that, great, more power to you. But if that doesn't happen, if it goes just right above and drops right to this level where you expected it to go even lower, but it doesn't. And then the price reverses and you start seeing this impulsive move to the upside. And then you're forced to buy at higher prices regardless. So if you're going to buy regardless, you might as well just dollar cost average in at this price, because let's be honest, look at the price action chart and see and tell me this is not a good buying opportunity. This is a very good buying opportunity, and we're already down 92%. We could see a further pullback, like I said, all the way down to the bottom of the 2021 summer pullback, so 93, almost 94 cents. That's a possibility. But if we start dropping below the June-July bottom, I think that could be a negative thing, because we don't really have a bunch of support. As you can see, we simply started blasting into basically going to the moon, starting with January 2021. So technically, if we start dropping below that level, we might see a very, very strong drop for Avax until we come back into this trading range that we created back at the end of 2020. So if that happens, then yeah, you can potentially catch the coin at these prices. But like I said, for that, we would need to lose this important low. And I think once we start dipping our toes into that support block, people are going to start buying up Avax pretty quickly. So that's what I have regarding the daily chart. Now we can switch over to the Binance website. And before we continue, I quickly want to ask you, do you value your privacy? If the answer is yes, then you must take a look at ExpressVPN. ExpressVPN offers you the privacy that you deserve, no activity logs and no connection logs. Your internet provider won't be able to access anything, and anyone using the same open free Wi-Fi in the cafe as you won't be able to do any harm or breach your security. You can use the ExpressVPN application on any device. You can connect it to your PlayStation, or you can even connect it to your router so that anyone who connects is automatically secured. Or if you're looking to access any region-blocked content on your streaming platform, well, ExpressVPN can do that as well. If you're living in the Netherlands and you want to access a TV show that's only available in Japan, well, my friend, you can do that with ExpressVPN. You can use the link down below in the description and get a discounted price along with 3 extra months for free. You can get your money back if you don't like it, but I don't see any reason why you wouldn't like it, because we all need the privacy, and in today's age especially. And you can also pay with Bitcoin, so that's a really cool feature as well. And let's get on with the video. Taking a look at the weekly chart for Binance, as you can see, I have the support block here for you, the one that we created in 2020. We have the low of the 2021 summer pullback, and right now we have a falling wedge that we are in. Obviously, we haven't lost the support of the falling wedge, which is, I am surprised by that, because I thought we would be losing that support trend line. That hasn't happened. And our current technical target is all the way up here at $30, which is where the falling wedge was created. And as you can see, we are very deep into the pattern's apex. So once you're this close, you're forced into a breakout to the upside, obviously, or a break to the downside. Whichever comes, you should be ready for both outcomes. If you get a break to the downside, obviously, good buying opportunities. If you get a break to the upside, this could be a nice swing trade opportunity where you could take profits at the technical target, or maybe even slightly below the technical target, and then buy back in once the price retraces. That's also something that you could be doing, or you could simply be staking until the next bull market to eliminate that additional stress level that you get from swing trading. So this is what I have on the weekly. Obviously, the 20 EMA is going to be a pretty important resistance level, because we haven't retested that since April this year. So we could run into that level and then come back down. But honestly, I think if we're going to get a breakout from this falling wedge, I think it's going to be pretty significant. I think it's going to be a pretty strong breakout, and people are going to make some good money here if they're smart, right? You could also sell a bit early, right? Just to be careful and not wait until you start pulling back down. But, you know, I'm kind of rambly here. I don't want to take a lot of your time. Basically, I'm trying to say just be careful with your swing trades, especially near the bottom of the bear market. Now, taking a look at the weekly RSI, nothing really has changed since the last update. We're still in this channel down pattern, and we're still targeting this support level, right? Once you bounce off of that, that's a good buying opportunity. Taking a look at the weekly RSI, or rather the weekly stochastic, as you can see, we are in the oversold below the index of 30. Great buying opportunity, and the MACD for now hasn't printed a bearish cross, so I wouldn't be looking at the MACD for now. So that's pretty much everything I have for Avax. If I missed out anything important, please let me know down below in the comments section. Feel free to follow me on Twitter. Feel free to check out my Patreon, and feel free to check out my Discord server. I'm going to see you in the next one. Goodbye and good night.